Everyone, welcome to our channel where we help your real estate investments work harder for you. I'm Samantha, and I also have Spiro here today with us, and we're both from Elevate Realty in Toronto. And just to introduce Spiro, he wears many hats. You are a sales representative, a leasing and investment consultant, a property manager, and he's also an investor. So that's why we have Spiro here today, because he just purchased a property a few months ago, actually in May, right in the middle of phase 1 lockdown. So this is a very interesting purchase. If you look back, you would think he's a super smart guy. He got a great deal because he purchased right at the lows. But I guess not a lot of people would be purchasing at that time anyway. So it's a super interesting experience. And that's why I brought him on to talk with us more about this investment property. Let's get started. So Spiro, how did you find this property anyway? I know I was kind of part of it, but I'll let you talk about it and I'll fill in the details if we need to.
Yeah, well, thanks, Sam. Thanks for having me on. I appreciate it. It's been a super exciting few months for me. I mean, with everything going on, everybody's been in such a crazy situation now. And you're absolutely right. A lot of investors actually hesitated during that time period, given that April, May, June period was very slow for investment. And that was because people didn't know what to believe in the economy. They didn't know if house prices will drop or what was going to happen, which is actually a great time to jump into the market. So that's what we were all preaching, and that's what I closed up on. So it was a great little month there that I found a good spot to jump in, and I was able to convince one of our investors to go in with me and buy that property. And yeah, it was actually crazy how it started. I mean, you were definitely a big part of that, which is actually pretty funny, and it just shows, I guess, the team atmosphere we have here.
Yeah.
So yeah, just to touch on that, I guess. We've been in talks for the past few months now. I think you and I mean, maybe starting in January, and you were on me saying, get pre-approved. Let's jump in on a deal, or at least figure out where you are right now. And you know what? I kind of held back on that for a little bit, just because as for anybody, it wasn't the right timing. But given this whole situation we're in with the economy, I figured, you know what? Now's a good time to kind of reevaluate where I am and try to get into the market. So I did talk to one of our awesome mortgage specialists and found out where I could purchase and found out my purchase price. So I knew that with an investor I could pick up around $1 million property. So right there I knew the ballpark I was in. The same day I gave you the call and I was like, hey Sam, I got the pre-approval. Let's jump in on a deal. And you were like, I don't even think you responded to me. You just sent me an address. Take a look at this. And it was like the same time. So it was pretty funny. I looked at it, ran the numbers on my own. You sent me your numbers. They're practically equal because
they're great.
We're part of the same team. So yeah. Our numbers looked awesome. And at that point, it was a no-brainer for me. I saw the numbers and I was like, I'm going to make this deal work somehow. I need to, because if I don't, somebody else will. And at the end of the day, they're going to be making the money and it won't be me. And obviously I'd rather it be me. So that's where you and I spoke about it for a bit. But I think given your scenario currently too, I mean, a lot of craziness at home, right?
Exactly. I mean, the numbers definitely made sense. It was a great deal. But, as a real estate investor, it does take work and time too. And right in the beginning of the lockdown, I just didn't have extra time with 2 kids at home. And we didn't know how long the lockdown would be. So even if it's a great deal, if I don't put in the time and effort into the investment property, it won't work properly. So that's why I passed on the opportunity to you. And even though I didn't get it, I was really happy that you got it.
I was extremely pumped about that. And I think, you said it yourself, it's a lot of work to run an investment property. And I think a lot of people think it's as easy as just purchasing and then renting it out. That alone isn't that easy. There's a lot of complicated parts to it. But that's exactly where I took advantage of my skill set and our skill set as a team. And I utilized that in finding a great partner and investor with me. So just a little bit about our deal without getting into too much detail and keeping it very simple. I run the day-to-day of the business, of the investment. So I ran everything from purchasing to all the closing costs, to all the renovation costs, to managing the renovations, to all the contractors, everything that went along with the property, I ran. I was there, many times a week, and through the leasing process up till now, where it's all leased out, and we're just doing the final touches, I believe now, just with some of the work we've done. But my partner has been to the property maybe twice, so that's where it worked out for us. Because, like you said, most people don't have the time to do it if they don't have a proper either agent or company or partner. So that's where it's a win-win for us, big time.
So let's talk more about that. So you mentioned you have a partner. Can you share a little bit more about this partnership arrangement?
I think a lot of people have probably heard of JVs. My partner is the money partner, and I'm the managing partner. So it's perfect, and it's a win-win situation for both of us. I take care of everything. He doesn't have to worry about anything ever. All he worries about is getting my messages where I've already analyzed the situation, whatever pops up, whatever the costs are going to be, and give him his options, and I send that his way. And at the end of the day, he's awesome. I honestly am super happy. Our partnership is off to a great start. There's been, the trust is there. It's awesome. And I just send him my report on anything, and he kind of signs off on it as well. But I think from his perspective is, trust the professionals. He took that jump with me in May. It wasn't too hard to convince him because he believed in us. He was like, you know what? If your whole office thinks this is a great deal, I'm not going to go against what the professionals say and say, no, it's not. And the fact that you wanted to jump in on it, I wanted to jump in on it, and actually we had other people that were very interested in it. He was like, there's a reason for this. It's not, he knows what we do. So he's like, let's jump on it.
So can we talk a little bit more about the environment during that time? We were in lockdown. The markets were actually frozen, and whoever was selling really had to sell because they were having problems holding onto the property, and people weren't leaving their houses. How was it like in terms of the rental situation? How was it like with the selling process and everything?
The rental market has seen a small hit in Toronto, and then there's no way around that. I think renters are the ones impacted the most by all of the restrictions now in the economy. So you're seeing, anything in the restaurant industry and entertainment industry, those all just were wiped out, and a lot of people lost their jobs. So that, along with the Airbnb influx of short-term rentals turning into long-term rentals, the market was flooded with supply. So rental, we saw, a dip in around 7 to 12%, depending on the unit, the size, location, all that. Actually, the main effect was in condos. Condos saw the biggest decrease there. So overall, there are still people looking, but there were a lot more options out there. That being said, our numbers, we initially predicted $5,000 in rent for this specific investment, and we actually got 5,200. So even off the start, our very, very extremely conservative numbers worked out to our advantage, and we're still overperforming whatever.
It's always better to stay conservative just to make sure it makes sense in worst case scenarios, and if it does, then it'll only get better, right?
Exactly, and that was huge for us because we didn't have to go back, or I didn't have to go back to my partner and say, hey, listen, I said this initially, but it's not going to work. It was actually a very good conversation because the whole time I was like, we're going to make more than I initially stated. So that was all good, all well. As for purchase price, actually, I guess around that time in May, we saw prices stall. So prices weren't realistically dropping. I wouldn't really say that, but they weren't increasing very fast because people sort of stopped. And us included, everybody was like, okay, let's see what happens. Is this the apocalypse, or is it just a little blip? And it turned out being a little blip, which is what I think we predicted in actually making this purchase and investing. So we took advantage of that stall and said, you know what, this is a purchase price that we probably won't be able to get a few months down the road. It's extremely low for a detached duplex in Toronto, and we ended up picking up for $895, which is great. And I guess that kind of segues us into the purchase of the property. So when we picked it up for that number, there was a reason that we picked it up and other people didn't. And it was because there was some work that needed to be done. I mean, it seemed turnkey on paper, but once you have a home inspection and the home inspector points out specific things that need to be changed, and then the reno cost starts increasing, a lot of, I would say, inexperience are going to start backing out because it's going to scare them and bring up red flags. But to us, I mean, we know that's not really a red flag. That's something that we can take advantage of.
I definitely wanted to touch on that because when I looked at the photos, it looked like it was ready, but I do see that you spent $40,000 on renovations. So if you can talk about the breakdown of that and why you needed to spend that amount on the property.
You're exactly right. You use the term needed, and I don't think we needed to put $40,000. I think we could have put somewhere around 20,000 and got it up and running. That being said, maybe our numbers would have looked a little better, but you run the risk of some more headaches in the short and medium term. And me being the managing partner, I want to mitigate as much of the headaches as possible that I might get. So the $40,000, if we break it down, I'll start with the thing that needed to be done. So we walked in, and actually all of the ventilation in the property was just brutal. I mean, all the range hoods and washroom fans, they all went straight into the drywall, which is ridiculous. Yeah, that's cheap ass renos. That's not that's not great. So we walked in. I mean, our home inspector pointed that out right away. He's like, you're gonna definitely want to fix this because you're gonna have mold within months of and it's gonna be throughout your drywall. So we got that done. We did some minor touch-ups throughout the property that just needed updating. We added a bedroom in the first floor unit. So that brought rents alone from probably roughly around $1,700 a month to $2,200 a month, just by adding that bedroom, which is awesome. So I thought that was a necessity as well.
So let me just, so how does the layout look like? You have 3 units, and how many bedrooms are in each of the units?
So initially when we bought the property, there was a 1-bedroom on the main floor, a 1-bedroom on the second floor, and a 1-bedroom in the basement. So it was all 1-bedrooms. Now, when we walked through the property and saw the place, we saw that the main floor had definitely potential for a 2nd bedroom. I mean, it was huge. It was a huge 1-bedroom. Yeah. So that was initially in our plans was, hey, let's get up another wall here, make a 2-bedroom. And it's a win-win scenario for us and for the renters because 1-bedrooms at $1,700 are pretty expensive in general. Not because we're overpricing the market, but because Toronto's so hot. It takes somebody with a good salary to afford that. But a 2-bedroom is much more affordable at $2,200 for 2 people, right? So that's $1,100 each. So you're making it more affordable, adding a room and increasing rent at the same time. It's a win-win scenario. So for sure, that was something we wanted to do. We installed an AC unit, a central air. Now that's not exactly necessary, but the 2nd floor was very hot. There was AC was needed in the property. So we did just put it.
Definitely. With the heat this summer, if they didn't have AC, you would get complaints.
Exactly. And it's all about minimizing our complaints and minimizing me running back to my partner and saying, hey, we need more money, or hey, there's an issue here. I wanted to mitigate as much risk as possible. So we fixed all those things up. Now the outside of the property was in pretty rough shape. Like it was pretty gross. The backyard was filthy. There were, glass shards everywhere, bottles, garbage, weights. Like it was ridiculous. And the front looked pretty, like dumbbells. Like it was weird. It was just, it was in rough shape, and weeds. The grass was overgrown and barely there, patchy. It was rough. So that was another thing that we wanted to fix because it wasn't relatively too expensive, but we wanted to fix that, make it look better. And so we resodded it, and we actually benefited because the last necessity that we really needed to do was waterproofing. Now, some people may not see that as a necessity and try to ban.
It definitely is.
Exactly. Yeah. In our opinion, I mean, that's the number one thing that's going to cause headaches in the long run is a leaky basement. So we hired waterproofers. They went in and definitely did their job and graded the property properly. So now any rainfall in the future is going to be shot away from the property, not right into our walls and cause any damage going forward.
Let's go over the timelines of how long it took you from, getting the offer accepted to when you got your property fully leased out. So we talked about you getting the offer in May in the middle of phase 1 lockdown. And then I don't really know what happened after that. So when did you actually get the keys to the property? How long did renovations take and how long did leasing take?
We started the offer, I believe it was May 5th, and we firmed up, I believe, May 15th, roughly. So it was around a month till closing. So we had a month to get all of our paperwork in order, the mortgage, all that, get it all in order and close on the property. So we closed on it on the 15th. I got the keys that day, and we already set up all our work. So work started practically the next day. So we were in there doing the work, and throughout that whole process, I was actually leasing the upper and basement unit at the same time because there wasn't really many aesthetic changes going on. I mean, in the basement, we ended up ordering a new fridge and a new stove and oven. So that you can still show a place without a fridge and stove and just say you're putting one in. So
that's the thing, like to minimize vacancies, you need to be on the ball and get things rolling as soon as possible. So even before you take possession of the property, you start arranging the contractors. And as long as it's photo ready, even though if it's not completely ready, you can start advertising the unit for lease.
Absolutely. And our first two tenants, so the upper unit and the basement unit, moved in August 1st. So very quick turnaround from June 15th. That was a month and a half out, and they moved in. We have received first and last month's rent from them. They're great. No complaints on either end, and they're really excited to move in. So they're already in, and the main floor is going to move in on September 1st, but we've already received first and last from them as well. A great fit for the property as well. So, I mean, it was a pretty quick turnaround. I would say a month and a half, that whole process. It was a crazy time period because there was contractors in there, tradespeople in there, me going in there, showing the place. So it's, I mean, you came out to one of the showings. There were a lineup of people, and I mean, if it's priced properly and you're showing it well and you're very responsive, you're going to get people in there pretty quick.
As always, we want to see how the returns look like. And you talked about the property being purchased for $895,000, and then we spent $40,000 on renos. And there's some closing costs in terms of legal fees, land transfer taxes. That's $30,000. So in terms of the total capital you spent, based on a 20% down payment, you spent probably around $250,000 on the property, right?
Yeah, including renos, including everything, closing costs. Yes. Our total rent that we're getting on this property is $5,200 a month. That would be $1,700 for the upper unit. That's the 1 bedroom. $2,200 for the main floor unit. That's the 2 bedroom. And $1,300 for the basement unit. So 1 bedroom. So all in all, $5,200. I think I'm doing my math right there.
Yeah.
Our mortgage is roughly $2,700 a month. The way I look at it, and the way I think you look at it as well, is that half of that's principal. So we're paying ourselves back. It's a really good cost. And then the other half is interest payments. So really, realistically, half of that is us paying somebody else. Then roughly you budget roughly around $1,000 for our expenses. That covers all utilities and everything else that's needed, insurance. So the $2,700 for the mortgage plus the $1,000 for the expenses. So that leaves us with a cash flow of $1,500 per month in Toronto, Ontario, Canada.
That is really high. I mean, typically on a good investment, we're seeing $700 to $800 of positive cash flow a month, and you're doubling that. And I mean, partially it's because you got the property at a really good price as well. But that's really amazing. So let's talk about cap rates. And if you're not familiar with this, cap rates is a metric that we use to compare different rental properties just to see how well their rental income is. So the higher the cap rate is better. And how we calculate this is by taking the net operating income and you divide it by the property's price. So for this property, what are we looking at for cap rates?
So our cap rate is roughly 5.2%. Which is a pretty strong cap rate for an investment. I mean, it's definitely on the higher end. We are roughly on typically between, I would say, 4.5 and 5% is where we look at. So this is 5.2%. It's a great deal.
Thanks, Spiro, for coming on today. It definitely was a little bit more uncertain to buy the property during the middle of the lockdown. But because we were in the market, we knew that even though the prices seemed like it was going down and the markets were frozen, the fundamentals in Toronto are still there. Good tenants were still paying rents. And I mean, at the end of the day, if you can purchase for a lower price, then you'll get better returns on your investment. So if you want to see more photos and a video walkthrough of Spiro's property, you can head over to his vlog, and I'll put the link in the description below so you'll know where to go. And remember to like our video and like his video and share and subscribe to both of our channels as well. And again, if you need help with real estate investing, if you want to buy an investment property in Toronto, our team is here to help. Spiro's a great example of one of our wonderful sales representatives who can help you out with that. So feel free to contact us, and I'll also link in the description below how to contact us as well. That's pretty much it for our video this week. I wish you guys all the best in your real estate investing journey. Thanks so much for watching, and I'll see you in the next video.